Hi everyone, this is Bagger Don at StockMarketCaddy.com. It's November 29th at about almost 9 a.m. We follow a fellow trader, a fellow by the name of David LaRue. I've never met him, but he does very fine work from the folks at StockCharts.com, which we do subscribe to, and I recommend, and also recommend following David. He does some really nice chart work, and he's been talking about or mentioning the yen carry trade, and we very much follow that notion. And exactly what is the yen carry trade? Well, let me show you on a chart. This is on a daily basis. This is the yen. This red line is the yen dropping in value, and this right here was right at about the same time on November 4th. The yen falls in value and our stock market rips higher. So what is it about the yen that makes our market go higher? Well, folks, it's what they call the yen carry trade. It's the old trading strategy, fairly risky, done by hedge funds, done by the Mark Cubans of the world who think they're smart by a half, and he's not that smart, where they borrow a currency that is going down in value, that is cheap to begin with and is going down in value. You borrow that currency and then you convert that currency quickly to dollars or into a high risk asset that is going up in value. So you really, as long as the market continues higher and the yen continues lower, you're in beautiful shape and you can really juice your returns. Now, one of two things can happen, and as you can tell here, which came first, the market up or the yen? Probably it was the yen, ever so slightly, and their computers are keyed to this to catch these major breaks. What can happen though is if the yen should begin to appreciate for any reasons, and I'm not going to speculate right now on fundamental reasons, we're just talking about the concept of a yen carry trade. If the yen begins to rise in value, it will put pressure on this trade because no matter how much higher the market goes, and it's already high, and the risk picks up, if they go to exit this and then try to exit the carry trade on the yen, if the yen is up in here and they borrowed it down further, whatever profits they would have made, they would lose on the exchange. So that is the notion of the yen carry trade, and there definitely is something to this. You can see it certainly on a daily basis, but let me change this chart to a weekly chart, and the real culprit was right in here, and actually it led off even before, but 2012, but right in here in January, I remember January of 2013, but actually it was up in here where the yen really was cratering, and we think in large part that is what sustained this carry trade. You can see that the yen had been rallying and probably putting pressure on that trade, and then they felt as though the pressure was off for whatever reason. So speculate election, what have you. But on a relative basis, though, you can still make a case that the yen is trying to come up off her bottom and rally from here. So just so you know where you are. So if you want to get kind of a Rorschach, if I'm pronouncing it correctly, or a mirror image, take a look at the yen, see what the yen is doing, and the yen is perceived to be it works out that way that when the market seems or when the world gets worried about something, it is it has a tendency to rise. Excuse me, I'm not sure if I would say as a safe haven, but as they unwind this carry trade. It also is a proxy for our bonds. The Japanese own a ton of our bonds. So when our bonds or treasuries go down, so goes the yen. and that also is in place. So let me show you that proxy for a moment. Let me put in the 10-year Treasury, and you can see here as our Treasury broke here, so broke the yen. Okay, but are our Treasuries really done? Not so sure about that. Okay, they haven't. Still looks to me that they're in an uptrend. So the Treasuries in yen reflect a risk-off model, and it could be that it was a knee-jerk reaction as the bonds broke after the election, relief rally, what have you, higher interest rates. That it is what juiced our markets, and we still think we could see a sharp reversal here. So be aware, be careful, and we think what David LaRue does on stock charts is all good work. Alrighty, be in touch.